What will happen to the global economy if the US dollar loses its status as the world's reserve currency? Robert Kiyosaki, the famous author of Rich Dad, Poor Dad, and guru of financial freedom, in his book, Rich Dad's Prophecy, Why the Biggest Stock Market Price in History is Still Coming, and How You Can Prepare Yourself and Profit from It, offers a prophetic perspective on the state of the economy and the potential for a significant stock market crash and how we should prepare, stay informed and empower ourselves for what's to come and in the same time profit from it. But before we get to that, let's hit that subscribe button for more content like this in the future. The US dollar has been the world's reserve currency for over 70 years. This means that it is the most widely used currency for international trade and investment. The dollar's status as the reserve currency gives the US government a number of advantages, including the ability to borrow money at low interest rates and to influence global economic policy. However, there are a number of factors that could challenge the dollar's status as the reserve currency. These include the rise of China as an economic superpower, the increasing use of digital currencies, and the growing concerns about US debt levels. If the US dollar were to lose its status as the reserve currency, it would have a significant impact on the global economy. It would make it more expensive for US businesses to export goods and services, and it would make it more difficult for the US government to borrow money. It would also lead to increased uncertainty and volatility in the global financial system. In this video, we will delve into the intricate relationships among high debt to GDP ratio in America, international conflicts such as the Israel-Hamas conflict and the Russia-Ukraine crisis, and their potential impact on the US dollar's global dominance. We will explore how these factors influence US monetary policy, including interest rates and money printing, and why, according to Robert Kiyosaki, author of Rich Dad, Poor Dad, and guru of financial freedom, sees the positive of investing in precious metals like gold and silver is emerging as a safeguard against a devaluing USD and the looming threat of hyperinflation. Robert Kiyosaki also mentioned how the lack of financial literacy and financial education would be the main reasons why most people are not prepared for what is coming in the near future if the situation doesn't change. He emphasizes the importance of financial education and encourages people to think beyond traditional investments like stocks and real estate. Instead, he advocates diversification into assets like precious metals and businesses. The United States, as the world's largest economy, wields immense influence over the global financial system. A significant increase in US GDP, indicative of economic growth and stability, can have far-reaching implications. When the US economy thrives, it bolsters international confidence in the US dollar and underpins its role as the world's primary reserve currency. Conversely, the United States is grappling with a mounting national debt, a concern that has only deepened in recent years. The increasing debt burden raises questions about the sustainability of US fiscal policies and the potential for inflation, which could erode the value of the US dollar. International conflicts, including those between Hamas and Israel and Russia and Ukraine, have the potential to roil global financial markets. Geopolitical tensions often result in heightened economic uncertainty. Investors may react by diverting their investments to safer assets, impacting currencies, stocks, and commodities. The ripple effect extends beyond the countries directly involved in these conflicts. The cumulative impact of a burgeoning national debt, increasing economic instability, and reduced international trust pose a threat to the US dollar's status as the world's leading reserve currency. As nations explore alternative options, the dollar's global supremacy is at risk, and the consequences could be profound. To navigate these challenges, the United States may need to adapt its monetary policies. The Federal Reserve, as the country's central bank, possesses the tools to address financial crises. These tools include managing interest rates and implementing quantitative easing, which involves expanding the money supply. However, such actions carry inherent risks, particularly in terms of inflation. Given the uncertainties surrounding the future of the US dollar and the potential for hyperinflation, many are turning to precious metals, notably gold and silver, as a hedge against economic volatility. These metals have a historical track record of preserving their value during times of crisis. Where gold has monetary value and silver has both industrial and monetary value. Unlike traditional investments like stocks, real estate, or savings accounts, precious metals are tangible assets that are not reliant on the health of any particular economy. Kiyosaki offers practical advice on how to protect one's wealth and even profit during economic downturns. He discusses strategies such as investing in precious metals, owning your own business, and building streams of passive income. But how can gold and silver would be a better option to invest in during the given situation? And why do most people still prefer to hold on to their US dollars rather than protect their assets knowing what is coming? Scarcity and intrinsic value. Precious metals, particularly gold and silver, are inherently scarce. Their limited supply, combined with the difficulty of extracting and mining them, gives them intrinsic value. This scarcity means that they are not subject to the same inflationary pressures as fiat currencies, like the US dollar, which can be printed in unlimited quantities. When the supply of a currency increases significantly, its value tends to decrease, leading to a decrease in purchasing power. Universally recognized, gold and silver have been accepted as valuable commodities throughout human history and across diverse cultures. This universality means that they can be easily exchanged or sold in various countries without the need for currency conversion. They are recognized and accepted as a form of payment or value preservation across borders, making them a reliable asset for international trade and transactions. No country risk. Precious metals are not tied to any specific country or government, which makes them a no-country risk asset. Unlike fiat currencies, which are influenced by the economic policies and stability of their respective countries, gold and silver are immune to the political and economic fluctuations of any single nation. This characteristic is particularly valuable during times of political instability or when there is a lack of confidence in a nation's currency. Historical safe haven. During times of economic turmoil, such as stock market crashes or currency devaluation, investors tend to flock to precious metals as a safe haven. The historical track record of gold and silver preserving their value during crises has solidified their status as a store of wealth. They have weathered various financial storms, including hyperinflation, wars, and economic recessions. Store of value. Gold and silver are often referred to as real money, due to their intrinsic value and ability to act as a reliable store of wealth. Unlike fiat currencies, which can lose value rapidly due to inflation, economic crises, or government mismanagement, precious metals have consistently maintained their worth over time. This stability makes them an attractive option for preserving wealth. Protection against hyperinflation. During periods of hyperinflation, where the value of a currency rapidly erodes, gold and silver can act as a hedge. Their value tends to increase as the purchasing power of fiat currencies declines. This makes them a safeguard against the devaluation of money and the potential loss of savings. These precious metals are seen as real money with inherent value, providing a level of financial security that fiat currencies cannot guarantee. One of the key takeaways from Rich Dad's Prophecy is the importance of being proactive and taking control of your financial future. Kiyosaki empowers people by urging them to educate themselves and make informed decisions. Don't invest in things you don't understand. Don't borrow money you can't afford to pay back. Always do your own research and seek a professional financial advisor's help if needed before making any investment decision. Be sure to hit that subscribe button for more financial education content like this. And share this video with anyone who needs it. Thanks for watching. Until then, stay financially savvy.